I believe this is a very interesting, compounded problem that BIS has identified. Normally, they would talk. Typically, it's a banks association, so they would be talking about debt and inflation. But it's very interesting to see AI also coming into picture. Now, just to give some context, normally money chases return, and what has happened is globally, the amount of money that is being poured in to create data centers, to create these LLM large language models, which are fueling the AI growth. A lot of capital, which was publicly available, as well as private capital, has suddenly gone towards these resources. So, as a bank, typically when I want to borrow money, I would be looking at investments from normal public as well as from large institutional investor. But everyone wants to invest in AI. Why? Because over a period of last 1 or 2 years, some of these AI companies have given 500, 600% kind of return. So, I mean, if you just take example of Nvidia, it was 2 years back close to 125 or $150. It went all the way up to $1,200, and then there was a split in it. So the kind of return that investors are making, it is really phenomenal. And now you are seeing a backward integration of that. So now the money is not only going in chip makers, but also the companies which are making wires, companies which are making memory chips. And all of this capital is basically drying up the capital available for banks, basically, because banks and governments, basically across the world, are starving for capital because they are not able to match up with this. Uh, Adding to this problem of scarcity of supply of money, you have global energy crisis, which is being caused due to the recent war that has started. And this has really put pressure on economies globally. And we have seen, crude oil prices going all the way up to $120. Though last Friday it had gone down to 62, $69. And again, the war has started, or the conflict at least has started, I would say, which has put again pressure on energy. So energy is one core theme which causes inflation. And on the 17th June FOMC meeting that we had, luckily this time the Fed did not increase the rate. They have kept it unchanged at 5.5 to 5.75 range. But I mean, this may change very soon if the inflation sticks around, because inflation in May has gone up to 4.2% from 3.9 in US. And this is not just a US problem, but it's a global problem. I mean, developing economies have already shut down, operational activities where they are trying to ask people to work from home, which has really put pressure on the economy globally. So this is, I would say, a problem created from, supernormal return that AI companies are giving, to probably creating a shortage in money market for supply of money, because the return that you get from an investment in AI is higher than the investment probably in a bond. And now it is adding more pressure because if the inflation goes up, it is going to again put pressure on the banks to increase rates. And yes, so from a classic economy perspective, it's a risk off, which most of the economies have to take care of, and also especially central banks, because if the inflation continues or energy prices continues to stay higher, it may put many developing economies in trouble because of this higher levels of inflation.
Right, Doctor, but well, I'll just go over to, global bond markets. Now, the report also warns that record high public debt and growing resilience on leveraged non-bank financial institutions are making sovereign bond markets, more vulnerable to sharp swings. So, according to you, how exposed are global bond markets today, and where does India stand in terms of fiscal resilience and financial stability?
So yes, I mean globally, this is a very big challenge, because in the past, the AI, you could say, the bubble was fueled by just institutional capital or private capital. Now suddenly there's a lot of public money, and a lot of non-institutional money also is going into this sector, which is causing a huge pressure in the market. And from an India perspective, I would say that, or even globally, all government bonds yields are expected to go higher. To some extent, in India, the what the Indian government has done is, or the RBI has done is, they've increased the interest rates for the foreign or the dollar deposits, that is the FCNR deposits. But the local deposit rates are still lower. So, from an economy perspective, the Indian economy won't face that brunt because the cost of capital is still lower for Indian, companies which are borrowing from banks. But this is also an intentional move from the central bank because they want to insulate the local economy from the international turbulence that is happening. So, which is one of the reason why even the currency got a hit because typically when your currency falls, one way by which you could stem that fall or depreciation
मैनलेस दीदी ये
economic activity in your domestic market. So it's a very smart move that the central bank in India has done that they have not they've kept the domestic rates lower, but at the same time for dollar deposits they have kept increased the rate so that the capital flow comes in, and which you have seen in the value of rupee. The value of rupee has appreciated over last 2-3 weeks since the FCNR announcement happened. So the inflows have started coming in. So for now, I think the central bank is walking the tightrope. But I think if the energy prices continues to stay higher, and if the AI bubble continues to rise further, I believe it may be a challenging thing to keep the same rates going forward.
Right, I hear you, Dr. Bhatt. And the report, the BIS report, has also questioned the sustainability of the current AI-led investment cycle, warning that heavy capital spending, supply bottlenecks, and elevated asset prices could resemble previous technology booms. So, are we beginning to see signs of an AI-driven asset bubble, or is this investment cycle fundamentally different?
It's a very interesting observation actually. In when we say AI bubble or any bubble for that matter, um, typically you should value the patent, or you should value the technology. So when we talk from AI perspective, it's the large language models or the companies which are creating these LLMs are the ones who should get the valuation. But now what we have seen in the last leg of this AI bubble, you'll find commodities getting priced higher. So when I say commodity, it's like, say, a fiber optic wire. So when NVIDIA invests in a wire company, suddenly the wire company's value went up by 5 to 7 times. Now, wire is not something which is like anybody can make it. If there is more demand, more wire could be made. Similarly, memory chips. If there is more demand, more memory chips could be made. So there's no supply constraint in these because these are typically commodities. So when commodity prices go up phenomenally 2 times, 3 times, it's clearly a sign that there is a exuberance in the market because when you can produce something at a large scale, why would the price keep going higher? One of the reason is because a lot of people are overbuying it just to out of a fear. So this clearly is a bubble in making, but it's anybody's guess. When would this get peaked out? But I believe this is a beginning, or the signs are that these commodity companies like chip companies or memory companies, wire companies, their valuations have become 10 times, 20 times in last 1 or 2 quarters, and which is why you could see Samsung and many Korean companies as well as companies in Taiwan. Their stock valuations have gone up in last 2 quarters phenomenally high, which probably in last 10 years nobody was looking at the Korean market, but suddenly you find that there is a phenomenal return that many of the investors are getting from that market. So I would say it's a bubble in making. But it's anybody's guess. When would it get burst? So it's very difficult to predict that. But yes, it's a bubble in making because these are not things which should be valued at 5, 10 times. I can understand Nvidia getting traded at higher multiples because they have a core technology, but a wire company or a memory chip company trading at 20 times or giving 20 times kind of return is something not usual.
Right, that is actually a very thorough analysis that we got here today, Dr. Bhatt. But thank you so much for sharing your insights on the same.
Thank you.